in finance, I mean, there's first off, there's very little coverage of commodities, and they're all grouped together. So we were basically taught to think of precious metals in the same way you think about lead or wheat or pork bellies. And it's usually viewed with suspicion, and that they're volatile, and they expire and everything. But I'm curious in terms of why is this a special class, just from a finance point of view? As a finance guy, why would I want to think of silver or gold as a different kind of asset class than equities or bonds or something like this?
Well, the way I explain it, I have been lately, to try to get to 30-year-olds and under, is that gold and silver are the only assets that are outside the matrix, and that's what does make them unique. So let's do a thought experiment. My background's an engineer, and because of that, we're taught to integrate a function from 0 to infinity, and I'm sure, Posh, you'd agree that if I look at any function from 0 to infinity, I've covered all cases, and that's how I think, and it's been very beneficial to my economic thinking. So if I bend a wing so many times, eventually it'll break, so I have to look from the 0 case of no force on it all to infinity, where I bend it infinite number of times. Somewhere along there it's going to break. Anyway, back on point, everything in the financial system is tied to a counterparty of some type, a bank, a brokerage house, somebody that you have to negotiate through. Normally it's transparent. It's an electronic transfer that you never see, even think about in any way. I mean, you put your debit card in the counter at the grocery store. You never think about it as having any counterparty risk, but they all do. So the only ones that don't, the only ones that stand on the other side of the fence are gold and silver. And that's where you could take that one silver ounce that says $1 on it and spend it for $1 in the grocery store or the movie or anywhere else. You could also negotiate it, but that gets a little touchy, because that's when you get into barter, and is it legal? Yes, barter is legal, and contract is still legal, but the counterparty could say, well, David spent this silver telling me it was worth $20, but it said $1 on it, and I got ripped off. So it gets touchy in that area, but regardless of that, the point is simple. If you want an asset that's been money for 5,000 years and recognizes money for most of the world's people, regardless of what language they speak, that's outside of any counterparty risk, you can only go to 2 places, really. You could go to 4, I guess, but you can go to gold, silver, platinum, palladium, but that's it. So when you think about it, there's nothing about gold and silver that changes. I mean, the mass of gold, with 1 ounce gold coins, mass is the same anywhere in the universe. Yet they're all taught, as you said in business school, how volatile they are. But what is it? The mass of the gold coin doesn't change. So what changes? Well, what changes is the paper's relationship to that constant. That's what changes. But people can't do that paradigm shift in their thought process.
So it's the dollar that's changing, not the gold.
That's right.
Yeah, that makes
sense.
Or
the ruble, or the yen, or the euro, or the whatever.
And you've been a bull on silver, at least since 2000, and you've been right. And you've done some quick calculations in terms of the amount of paper money that's in the system, M1, versus silver, and I felt like we're still undervalued. Can you explain that a little bit better, and give us some of your thoughts as far as whether we're you think we might be in a bubble, or what kind of adjustments you would? Well, I'm not asking you to predict the price, but to discuss silver price in the larger context of inflation and money supply.
Sure. I did an article that's on the website. You might want to look it up. It's up to you. It doesn't matter. But and I haven't answered your question about silver, but I'm sorry. I'm an engineer. I have to build you a watch. But the recognized international settlement system was gold up until August 15th, 1971. And on that basis, you can find the theoretical paper price of gold, very simple arithmetic problem. You take the amount of money, which is cash and checkbook money, in other words, what we call M1, and you divide it by the amount of gold that the Treasury states that we own, which is 265 million ounces, and you do that simple division problem, and you discover what the theoretical price of gold is in paper terms. If you did that in 1980, what you would find is that that price level was $400 the ounce. Yet we all know that gold went to $850 January 21st, 1980. So what that shows is that it can, in times of financial distress, overshoot the theoretical par value. But you could have had a totally gold-backed currency in 1980 of $400 the ounce, yet it did go over that briefly. Well, if you do that same math problem, when I wrote that article, I think it was in 2000, you would come out with approximately $2,500 the ounce gold. But since silver's been out of the monetary system longer than gold has, and silver isn't used in any settlement basis except in private individual transactions that happen occasionally, it's a little harder to get a paper price of silver. So what I did was I looked at the theoretical price of gold in paper terms, and I said the monetary ratio of silver to gold has always been 16 to 1. It's not the natural ratio. The natural ratio is how it exists in the Earth's surface, which currently is 8 to 1. It used to be 12 to 1, but now it's 8 to 1. So anyway, the monetary ratio was determined by man, actually set by Sir Isaac Newton, who became a knight for him putting England back on the gold standard when we were having a financial debacle. He was knighted for that, not for Newtonian physics. And he set the price at 15.5 to 1 ounces of silver to 1 ounce of gold. So if you use that, you could use, the 2,500 figure, divide it by 16, and come out with $125 an ounce silver if you wanted to. But silver is more volatile than gold. Is a smaller market, and certainly not thought of as money by most people. Even a lot of investors that invest in silver invest in it because it's a commodity with upside potential, just like they would invest in nickel or wheat or corn or hog bellies. So to put a price on silver is a much more difficult question. But I would say since the metals are 85% correlated, that if gold's going up or down, silver's pretty much going to do the same thing 85% of the time. So if gold does go to 2,000 the ounce, let's say, it wouldn't surprise me to see silver go to the $100 target that I've set. I'm not fixed on 100. I'm just fixed on the fact that it could go far higher. And I haven't said this in a long time, but I'll be consistent. I mean, if the monetary system was sound, and we're talking a constant dollar, which of course doesn't exist because of inflation, but if there was such a thing as a constant dollar, silver's equilibrium price would probably be around 30. If it was just an industrial commodity only, like a lot of people like to say, if there was no monetary need, because the amount of silver that's mined currently with byproducts of lead, zinc, copper, and even gold mining, it'd probably be there. But it's the monetary demand for gold and silver that rises the price. The above-ground supply of silver right now is about 1 year, and the monetary equivalent for gold is about 40 years supply. So you're not buying these metals because they're really, really scarce, although they are. I mean, they're scarce relative. Gold isn't. I mean, gold is not a scarce element relative to how much exists above ground and how much is used. There's very little gold used, but it's a monetary metal. That's why it's hoarded. It's believed. In other words, it's back to the belief system. Enough people believe that gold is money and it will preserve their wealth. Again, the gold doesn't change. The paper versus the gold. So I would say, it's hard to get a fixed price on silver. It's whatever the market determines, right or wrong, the market's the market. I see silver going far higher. I think it could go, double from here and double again. So it could go 20, 40, 80 pretty easily. Could even double after that.